back to the What channel. This is the final video and I'm finally glad to say this is step 10 in the 10 steps to design your business plan. I hope you found it really useful and picked up some tips and tricks if you didn't already know them, and I'd love to hear back if you've implemented any of these steps in your business plan. It would be great to know that you found some nuggets of value in there. So yeah, 10 steps. It's very simple and you can find a lot more detail out there on the internet, but step 10 even is risks. So we're going to finish off with risks to your business. Now, looking at Investopedia, I can quote this where it says, business risk is the possibility a company will have lower than anticipated profits or experience a loss rather than taking a profit. Business risk is influenced by numerous factors, including sales volume, per unit price, input costs, competition, overall economic climate, government regulations. A company with a higher business risk should choose a capital structure that has a lower debt ratio to ensure it can meet its financial obligations at all time. That's a quote from Investopedia, and yeah, quite complex sentence there at the end. If it's a higher business risk, yeah, and a lower debt ratio, but it makes total sense. You know, limit the amount of debt that you're carrying if you're a high risk business. But if we go back to the basics, so the risk is an uncertain event that, should it occur, will have an effect on the achievement of your business objectives or goals. So looking at risks will ensure that you know what's coming ahead of them actually happening. Now, we always think of a risk being a negative connotation, but it can actually mean a positive opportunity as well. So, for example, if there's a change in the market and you see that as an opportunity, you can dive straight in and make something of that. And others might see that as a risk, but for you, if your company is quick to react, then it could be a really great opportunity for your company and business. So just listing out a few of the risks that I've listed down. So supplier risk: are you reliant on just a single supplier, or do you have 2 or 3 options for the products that you may purchase in before you move them on, if you are a purchaser of a product to move on and sell on? It could be price increases on anything that is supplied to your business. You might be in a position where you've got a limited amount of stock as well, so they can only supply a certain amount of stock to you, so you're limited there. And a second thing could be a staffing risk. Do you have staff? If you do, are they reliable? Do they turn up day in, day out? And can you rely on them if you are not in the office? If you take 2 weeks holiday, will things run smoothly while you're away, or will your staff be on the phone to you, checking in and checking what to do? Or if you are a one-man band and it is just you, there is a risk there, because if you're taken ill health or whatever, then obviously your livelihood is at risk there as well. So yeah, another one is keeping pace with the competition. So like we said earlier, with some change in the market, if you are keeping up with your competition or you're ahead of your competition, then you can actually see that as an opportunity rather than a risk. But if you're behind your competition, then clearly you will be behind on the sales if you are selling a good or a service. What else have we got? Right, so putting this in perspective of an example of I have a property portfolio and there are risks to that, and a couple of them could be interest rate rises, which will reduce my profit margin, a housing crash. You know, it's happened before, and with the subprime crash in the States, and yeah, pretty much there's a lot of nervousness around the UK as well. I don't know what it's like in the States at the moment, the market in the States, but you know, that's always a possibility, a housing market crash as well. Voids with tenants not being in the property as well. I've got to be very proactive in how I make sure that when a tenant is moving out, I've already got someone in to replace that. So voids mean empty places in the property, and that's what you should avoid at all costs. So that's another one. Non-payment of the tenants as well. That's another risk to my property portfolio business. And accidents, you know, they could ruin carpet, they could break things, and then I have to, providing it's obviously accidental, I have to replace all of that stuff as well. So that's a few ideas of how to deal with risks. Now, if you look on the internet, I come from a project and program background as well, where risk registers are things that hold a list of the risk and the likelihood of that risk happening. You can categorize things as likelihood, the probability, etc., etc. And you can score these things so that you've got them as a high, medium or low risk, the likelihood of those risks materializing. So you can look at that. What else? Is it something you can control and manage? A lot of times risks are things that are out of your control. For example, the supplier. If you only have a single supplier, then that's pretty much out of your control, isn't it? But if you've got 2 or 3 suppliers, then you're not reliant. So you've spread that risk around and mitigated against one supplier either going under or not being able to supply to you. So yeah, what's the financial impact as well? In your risk register or risk log, if you hold one, you should be able to put a financial impact to not being supplied with your product for a month in your business. Could that be catastrophic, or do you hold supplies within your own company or not? What else? So there's four stages in looking at risks in the project space, and it's identify, assess, plan. It's 5 actually. Identify, assess, plan, implement and control if you can. So you identify the risk and then assess it, categorize it, you plan for that risk materializing or not, and then implement what you've put in place or what you think you can put in place to minimize the effects of that risk, and then control it. That's part of the control as well. Look at the cause of the risk as well. If you can actually identify ahead of anything happening what could happen, and then when it does happen, you know what the cause is clearly. What's the impact of that, like we've just said? What's the financial impact, and what's the impact to your business in a 1 month period, or it could all be over in a day and it's all blown over, so quite a minimal risk there. Or is it long term? And what's your action plan for dealing with that risk as well? In project land as well, there's something called a RAG status. I don't know if you've heard of that as well, but it's red, amber, green. Categorize your risks as you see fit, and by scoring them as well, you can work out whether it is a really high level risk and categorize that as red. So in a risk register, you will clearly see how to handle your risks based on the color coding and the scoring as well. But I'll try and put some links in there that would be helpful to point you in the direction of risk registers and risk logs, because they are really useful. But I'll leave it there for now because it's just a quick video talking you through risks to your business. I hope you found it useful. It'd be great to hear back what risks that you are likely to encounter in your business and how you're likely to deal with them, or if something has actually materialized for you. I'd love to hear how you've dealt with that. So please comment, subscribe, like, and I'll look forward to catching up, and I'll see you in the next video. It's going to be a totally different subject now, but that's your business plan, hopefully in order, and I'd love to revisit this at some point to see just how far things have changed in a year's time within my own business as well. So there may be a separate video I'll put up based on the goals that I'd set at the start of my year within my new company and or companies, and where I have got to at the end of a year. So thanks for tuning in, and I'll see you very soon.